So now we just get to the question of, is it rational for a business to borrow money to invest in something? Well, what I would say is everything on earth was built with money borrowed to invest in. For example, you're in Dubai right now. Walk outside and look up at all those buildings. They were all built with debt.
Yes.
Okay. When you get on an airplane, the airplane's financed. When you have a house, how many people buy a house with a mortgage loan? Most people. When you buy a car, so people buy cars, houses, airplanes, boats, commercial buildings. They build highways. Like, the world is full of stuff that was built with debt. How many companies borrow money in order to invest in their business? Amazon does. I mean, like, lots of Apple does. By the way, Apple, you know, like, the world's full of companies. In fact, 95% of companies have borrowed money. So borrowing money there probably is no piece of commercial real estate ever developed that didn't have a loan on it, right?
Yep.
So it's not really strange, in my opinion, to borrow money in order to invest in a business venture, which is what we did. It's just that we were the first company to do it in the Bitcoin space, right? We basically, we borrowed money to invest in a big tech monetary network growing more than 100% a year that's 95% dominant. Okay, so is that better idea than borrowing money to buy a house? What's the odds that your house price is going to double in value every year for a decade?
For sure.
Probably not high, but every single person that's ever bought a house probably took a mortgage out to buy the house. So my point really is, we're in business to make rational investments, and businesses make rational investments and execute their strategy using a combination of debt and equity. So you can finance it with equity, you can finance it with debt. We actually finance things with a combination of those two things, and that's just what businesses do. So it would be aggressive if I took a margin loan, especially a margin loan, you know, with like 80% loan to value, right?
Yep.
And it's pretty obvious, you know, if the thing trades down 20% and you're 80% loan to value, you get liquidated. So that's an aggressive strategy. Taking an uncorrelated loan against other property, basically mortgaging a company. We borrowed money against the cash flows of our business in order to invest in another business, which is going up more than 100% a year, right? All we did is we just used our capital to invest in a line of business. You know, by the way, when Disney built Disney World, you know, I bet they also took out debt to build amusement parks. You know, and when Emirates Airlines buys airplanes, oftentimes they'll finance them with debt. So it's not uncommon for companies to use debt financing in order to expand businesses if they believe in the business.
I completely agree with you. And once again, it was the right decision. If I was in your position, because I am such a big Bitcoin believer, maybe I would have made the same decision. In the end of the day, I usually just say, like, taking a loan for something which is cash flow yielding makes, for me personally, more sense than taking a loan for something which is a hard asset, even though your success chances are very high, especially here, maybe on the tipping point of a new up and coming bull market. So I just wanted to distinguish here between cash flow yielding assets, for example, like airplanes for Emirates or like real estate. And then you have cash flow yielding assets. You can take the cash flow, pay back the loan. That was the only thing where I was not understanding this move.
I think it's an orthodoxy, but if you thought about it a different way, you would say, would you rather have an asset that yields 5% interest in like 5% coupon that's taxable, or have a zero coupon asset that doubles every year?
Yeah.
Does not, I mean, which of the two would you want? Like, isn't it pretty obvious?
If you're asking me, of course.
But the thing that's doubling every year is yielding you 100% after tax. And the thing that's yielding 5% is 3% after tax. So at the end of the day, it makes a lot more sense to own the thing that's appreciating in principle, tax deferred. And the real question is, do you believe in it or not? If you believe that Bitcoin was going to go up 20% a year, if you believe that and you had a house, you could borrow $1 million against the house. Take $1 million against the house and pay 3% interest, invest in Bitcoin and get 100% tax-free interest.
Yeah.
Like you would have a 98% arbitrage, right? Your $1 million loan, if you don't borrow the money, right, then if you don't borrow the money, then what do you have? You have $1 million in equity and it goes up at the price of the house. If you borrow the money, then you're going to get $1 million, and then in a year it's 2 million, and a year it's 4 million, and in the third year it's 8 million, and in the fourth year it's 16 million, and the fifth year is 32 million, and the sixth year is 64 million, and the seventh year is 128 million, the eighth year is 256 million, the ninth year is 512 million, and you know where we're ending up. You would be a billionaire at the end of 10 years if you took a $1 million loan and you would have paid $30,000 a year or $300,000 in interest. So would you pay $300,000 in interest to make $1 billion?